Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 31st, 2025, and we're diving into the latest earnings report from Church & Dwight. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Church & Dwight, known for its iconic Arm & Hammer brand, has just released its Q3 2025 earnings report, and there's a lot to unpack. Let's get started.
Revenue and profitability overview. Let's start with the top line. Church & Dwight reported net sales of $1.59 billion for Q3 2025, a 5% increase from last year. John, can you elaborate on the factors driving this growth?
Absolutely. The company saw a 3.4% organic sales growth, driven by a 4% increase in volume, although this was slightly offset by a negative pricing and mix impact of 0.6%. The domestic division grew by 2.3% organically, while the international division saw a robust 7.7% growth. The specialty products division also contributed with a 4.2% increase in organic sales.
And what about profitability?
Church & Dwight reported an adjusted EPS of 81, which exceeded the forecast of 73 from 10 analysts. This was primarily due to higher-than-expected volume and gross margin results. Additionally, cash from operations increased by 19.6% to $435.5 million, showcasing strong operational efficiency.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How did Church & Dwight perform in terms of margins and expenses?
The company reported a gross margin of 45.1%, which is a slight improvement from their outlook. This was achieved through productivity programs and higher margin acquisitions, despite facing higher manufacturing and tariff costs. Marketing expenses increased to $202.9 million, reflecting a strategic investment to drive brand growth.
Looking ahead, what can investors expect from Church & Dwight?
Church & Dwight has raised its full-year outlook for reported sales, gross margin, and cash flow. They now expect cash from operations to reach approximately $1.2 billion, up from the previous estimate of $1.1 billion. This indicates strong confidence in their ongoing strategic initiatives and market positioning.
Strategic initiatives and product innovation. Innovation seems to be a key theme for Church & Dwight. Can you tell us more about their recent product launches and strategic initiatives?
Indeed, innovation is at the heart of their strategy. Church & Dwight launched new products under the TheraBreath and Trojan brands, which have been well received. E-commerce sales now account for 23% of total consumer sales, up from 21% last year. Additionally, the company is strategically exiting the Flawless, Spinbrush, and Waterpik businesses to focus on core areas.
How does this align with their long-term goals?
These initiatives are designed to strengthen their market position and drive sustainable growth. By focusing on high-margin products and expanding their digital presence, Church & Dwight is well-positioned to capitalize on consumer trends and enhance shareholder value.
Key takeaways. As we wrap up, John, can you summarize Church & Dwight's performance and investment prospects?
Certainly. Church & Dwight delivered a strong quarter with a 5% increase in net sales and an adjusted EPS of 81 cents, beating expectations. Their strategic focus on innovation and market share expansion is paying off, and with a robust cash flow outlook, they are well-positioned for future growth. Investors should keep an eye on their continued execution of strategic initiatives.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Church & Dwight's performance in the comments below. Until next time.